Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 4th of August 2010. So far this week we're just slightly higher. We have run up to the 5400 level and once again rejected that. So a little bit of technical weakness there, but we are just a little higher on the week, maybe slightly flat. US indices actually doing slightly better than European indices. They're a little bit better on the week so far. And really from the economic data front, we've had some pretty mixed data from PMI numbers. Manufacturing was a little bit better on Monday, but since then construction and today service PMIs have been maybe a bit flat to slightly worse than expected. So markets had a good start to the week but haven't been able to maintain the gains. And of course at the moment there are these concerns that there is a double top forming in some of the major indices. Certainly in particular the S&P looks like there could be a double top forming there, and also the FTSE. But not only that, there are the 200-day moving averages that indices have had to contend with as well, and so we're seeing major resistance against the 200-day moving averages, really struggling to kind of get above them. So this move, this good move higher, some 10% since the beginning of July, which we've seen to now, just seems to be stalling at these levels. So the current situation is the FTSE is at 5340. The Dow, as mentioned, slightly better than a week ago. FTSE is pretty much where it was a week ago, but the Dow is slightly better, around 10,630. But certainly one of the themes of the last week has been continued dollar weakness. So we're seeing the euro dollar, which was only just above the 1.3 level last week, is much better than that. It's around 132.20. Same again for cable, almost tested the 1.6 area. We're just below there, around 159.40. And that's been to the benefit of gold as well. Gold last week suffered a severe correction to the downside, but it's recovered pretty much all the way back to 1200. We're just at 1196 in gold at the moment. So how are clients trading? Well, they're very much long the FTSE, so clearly they seem to think that the recent strength and this little pullback that we've seen is a good buying opportunity. So obviously thinking that the FTSE could retest the 200-day moving average, get back beyond 5400 and even go further higher. But conversely, they're short the slightly stronger indices. As mentioned, the Dow has been a little bit stronger than the FTSE, so clients are short the Dow and also short the German DAX. In the currencies, they were short euro dollar, and there's been a little bit of a correction from its highs. So clients very, very quick to take their profits. So very much largely flat euro dollar at the moment. When looking at cable, they're very short cable as well. So they're very much opposing the trend there. For gold, again, clients have remained long. They've very much enjoyed the rally from the 1156 area back to the 1196 area. So enjoying that rally in gold, but also they are short oil. So oil showing a little bit of strength as well, back above the $80 level, but that has brought a few clients in to sell it. So for the rest of the week, a couple of important rate decisions tomorrow, one from the UK and one from the European Central Bank. Again, it's going to be a situation of it'll be very much a focus on what they say rather than what they do. Interest rates expected to remain on hold, both from the Bank of England and the ECB. And that brings us on to Friday, which is non-farm payrolls, and that'll be the focus of the remainder of the week. So non-farm payrolls expected to decline around 60,000, slight improvement on last month where the decline was 125,000. So what's the theme of this week? Well, we've had a raft of banking numbers out. We started with European banks last week, and this week we've had UK banks. HSBC smashed their expectations, so have Lloyds, returned to profitability. So we saw a big jump in banking shares earlier this week. And I suppose the theme is has this revival in banking profits meant that it is going to be sustainable going forward, and will the banking sector be able to really may keep the global economy going by increasing lending to the wider economy. And really that is very much dependent on the macro picture. This week the macro picture has been very flat. It's indicated still that we are in a growth period and we can expect growth going forward, no double dip, but we will have to keep a very close eye on that to see whether the banks will maintain this tremendous performance and help the global economy going forward. So that's it for this week. As ever, do give us feedback at media@capitalspreads.com.